Welcome to a special episode of the Voice of Insurance podcast, produced in association with Placing Platform Limited, PPL. Today's guest is quite out of the ordinary for the Voice of Insurance. Normally, guests on the podcast can recount multi-decade careers in insurance from the time they fell into the industry up to the present day. Today's guest is extraordinary because he's someone of vast experience in his field, but who has only just been recruited into the insurance industry. John Mason is the CEO of London market electronic placing provider PPL and can boast a glittering career running the core systems and platforms that support hugely important global financial markets in other financial sectors outside of insurance. From this encounter, I can tell you straight away that I think we have a lot more to learn from John than he does from us. But thankfully for us, John is not the sort of outsider who has come to lecture us on how to drag our antiquated trading systems into line with markets that fully digitised decades ago. John is an experienced leader and the type of communicator who understands that a market that syndicates bespoke structured insurance coverage across the globe is bound to throw up many unique complications and challenges. He gets the tone just right. He's here to do an important job, and he has a clear vision of how to go about it. But he's very conscious of the need to meet us where we are and show how tech is going to make the way we already work way more efficient and higher added value, rather than try to force us to completely change the way we do business. And that's where this extraordinary podcast adds its value. John is easily the most eloquent leader running a core insurance technology platform I've ever interviewed. He knows where the pitfalls lie and has the experience to know how to execute large, complicated, transformational projects. He hasn't been with us long, but the ideas we discuss in the time that follows are highly impressive and are set to transform frontline brokers and underwriters' day-to-day relationship with the technology they use to carry out their jobs. They could unleash a wave of productivity and creativity that would completely reset the market's relationship with itself and with the rest of the world. It's extraordinary stuff. But as I said at the beginning, John is very much out of the ordinary. Enjoy the podcast. John, welcome to the Voice of Insurance.
Good to be here, Mark. Thanks for having me.
For anyone who doesn't know you, why don't you introduce yourself, run through your career to date and how you got to be where you are today?
I shall do that. I promise people I won't go back to when I left school. But I guess most recently, prior to joining PPL, I was at London Stock Exchange Group, commonly abbreviated to LSEG. And I'll probably, if I refer to it, I'll refer to it as LSEG from now on. But the group itself is made up of a number of organisations. I was in data and analytics, which was the old Refinitiv business. But also you've got the exchange itself, the LSE, and you have other organisations like LCH, the London Clearing House. So fundamental infrastructure components to capital markets. My job there is I ran the data platform. I was also responsible for the digital transformation. And then prior to that, I ran a couple of businesses, including the change for MiFID II, as it was back in 2017, which was the fixed income instrument.
I'll have to look up what it stands for, Brian. I suppose we can draw our analogy for any insurance people say it's sort of a bit like Solvency II, but for everybody else.
Markets in Financial Instruments Directive, I think.
Yeah, a massive regulatory tear-up.
It was huge, but principally around fixed income instruments. The actual original MiFID was back in 2007, which concentrated on equities. But that was a huge tear-up, almost the sort of year 2000 event for the financial services in some respects.
So that was a big deal. That must have been reconfiguring lots of systems.
That was a big deal. So I was responsible for rolling that out across what was then Thomson Reuters, across all of our solutions. So some of those were coming under regulatory jurisdiction. Some of them we had an obligation to our clients to meet regulatory needs. And others, it was an opportunity that regulation brought for solutions that we might want to bring to market. So I was responsible for all of that across TR, as we would have called it, Thomson Reuters. But principally, my background is digital transformation, data platforms. So prior to that, I was with Bloomberg, for example. And that's really what intrigued me about PPL. It's also, I think, what intrigued the board about me. I spent 6 months of my life saying, you realize I don't have an insurance background, to people saying, we don't want you to have an insurance background. We want the digital transformation, the data capability. And so that's what brought me here today. And it's been 6 or 7 months now of great fun, I must admit.
Well, now you've seen the lay of the land and insurance land, and obviously you bring all that experience from other financial markets. What do you think insurance can learn from the sort of markets you've worked with and perhaps vice versa as well?
I think there's always lots to learn, not just from where I've worked. We spent a lot of time looking outside of financial services. In the last few years, perhaps 5 to 10 years or so, there's been a much greater propensity towards data being first and foremost and being regarded as a real asset within the organisation. And I think financial services, my old world, the capital markets world, has gradually moved from being process orientated to data orientated. And I think that's something that I'm seeing replicated in insurance and in the specialty insurance market, where people are looking at data first or being a data-driven organization or a data-driven industry. And what does that mean if you put data at the heart of it? I think the other thing to learn is the capital market side of the city has been at this quite a long time. When you do these sorts of things, you end up looking up some facts and figures on Google. You think, I'm going to try and be interesting and talk about things. NASDAQ, for example, the first electronic trading exchange, 1971. So over 50 years, the capital markets industry has been at electronic trading platforms. And therefore, I think the insurance industry has a real opportunity to look at where what I'm going to call banking or capital markets is now, and not necessarily look back to when those markets transition from being open outcry or more manually orientated industries to being an electronic industry, but actually look at what sort of blind alleys they went down, what sort of mistakes they made, and learning from that and making sure the insurance industry goes for that now, as well as experiences from other industries. Why are a Google, an Amazon, a Netflix, a Spotify so successful? What have they got right? And what are we seeing in our everyday lives that we would expect to see in our professional lives? So I think it's about bringing all of those things together rather than just looking at it specifically and saying, oh, does that mean because you came from London Stock Exchange Group, you're going to be thinking about the London Stock Exchange and what that means? That's too simple an example.
I suppose one of the pushbacks always from the insurers would be, particularly in this market, would be, of course, one share of BP is exactly the same as every other share of BP. So they're all, the transactions very simple.
Yep.
Whereas, of course, here, there's no two insurance deals are the same. They're slightly bespoke. But I suppose these days that doesn't really matter. And presumably a lot of those bond deals, of course, they've all got prospectuses. They've got loads of nuances and other things.
And I think you've hit the nail on the head there, really, is capital markets is not just equities. I mean, they would be the most simplest vanilla trades that you can get. But on top of that, you'd have the fixed income, the bond market, as you say. And that is probably closer to insurance in that it's a quote-driven market rather than an order book-driven market, albeit what I have seen in insurance industry as well, some people are looking at, can we bring capacity to the market and then look to fill that capacity with people with an appetite for risk? That's perhaps closer to an order book driven market in that sense. But on the whole, it's very much a quote driven, which is nearer to fixed income and nearer to the OTC market, so the over the counter market. And all of those are unique contracts.
And I suppose you say over the counter, but of course you don't go over any counter. It's electronic.
It's electronic, and I think the thing to highlight there is electronic trading doesn't mean automated trading. I think a lot of people feel those terms are not synonymous, perhaps. When they talk about electronic trading, they think of algorithms and they think of algorithmic trading. That's not the case. There's still lots of traders and brokers involved in the banking side of the city. And I think what we want to do is understand how we can augment and supplement the insurance industry, brokers and underwriters and carriers. It's not about an electronic trading platform replacing, it's about an electronic trading platform augmenting and supplementing, providing more insight, allowing for decisions to be made based on data, perhaps not on sentiment or intuition. I think those are the things that an electronic trading platform brings. It's not about automating people out of the loop.
Big changes at PPL. One of the phrases I've picked up on through some of the media around these changes was the idea of changing PPL from being a market utility to being a market-owned tech firm. I want to know exactly what that means in practice.
I think what that means in practice is perhaps more control over elements of our destiny, I would say, as a market utility. And obviously I wasn't here at that point for the vast majority of the PPL tenure. But to me, a market utility means perhaps reacting to where the market wants it to go rather than
so
proactive.
You take the bins out.
Maybe that's being slightly unfair, I think, to the market requests we got. But I think it is very much the market saying, we want this and please go do it. And that's not to say that isn't fantastic feedback. We all want to hear what our customers have to say. But I think as we shift to that technology company, there's more of an onus on us to be more proactive in the marketplace. to perhaps extol a vision as to where we see PPL going and what we want PPL to be, rather than just purely react to wait to be told by the market. And I think that autonomy around strategy, and obviously ultimately that autonomy around our commercial models, levels the playing field somewhat to where we sit with some of the competitors that have emerged over the last few years.
And by leveling the playing field, you mean, I suppose, as a utility and with the way that the company was structured, you couldn't really raise funds in the same way that any commercial entity, a commercial competitor could.
That's right. And the way the board was structured, all decisions were unanimous. It was quite a large board. There are obviously different elements within that. And so it was difficult to perhaps get to some of that decision-making rapidly. And that, again, was not allowing PPL to perhaps compete on that level playing field in the same way that it will be going forward as a shareholder-driven organisation.
There's equity investment from Lloyd's of London.
That's right.
Rather than being this market-owned utility, should we think of it as a Lloyd's vehicle now then?
No, that's not right. And if you look at the statistics, yes, Lloyd's are our majority shareholder. I think that's public domain knowledge. But so are the IUA. They're a shareholder within the organisation. That obviously represents the company market within the London market. Yeah. And if you look at the flow of transactions across our platform, it's split something 60-40 between Lloyd's and the company market. So we're still significant in the way that we process for the company market, and I don't see that as changing.
And of course, with the change in structure to a more standard equity structure, you could bring in third parties if you needed big investment. Is that on the cards, you think? Or
nothing on the cards at present. But yes, you're right. It does put the company into a position where it could make use of that opportunity going forward. The company itself doesn't need any more investment to deliver on its strategic objectives currently in the pipeline. But who knows, 5 years down the line in terms of what the company might want to do, there may be other companies that it wants to look at. There may be other investments it wants to make. And it's great that it would be and have that structure to enable that to happen.
Of course, it's not just investors coming in. Of course, it could be you could merge or take over another company, that kind of thing.
The nice thing about our ownership structure, that sort of by the market, for the market, as it were, if the market feels that that sort of acquisition or that sort of investment is best fulfilled, and PPL is the best vehicle to do that through because of the nature of it, and it can attract that third-party investment to do so, then why not? So yes, I think it sets PPL up nicely for the future.
Yes, of course, given your experience across so many different markets, how important do you think it is for a market to own its own technology? Because it's one of these things, of course, it's sort of slightly paradoxical things, isn't it? Because, of course, the market's not necessarily the best technologist. What do you think? Is it better for a market to be in charge of its own destiny in that sense?
I believe it is. I feel strong markets are built on strong market-owned infrastructure. If I look at some of my previous experiences, like of LCH, CLS Bank, for example, market-owned, and those attract a global audience. I mean, likes of LCH and CLS Bank attract something like 67, 68% of the global derivative or the global foreign exchange markets. I happen to feel that's because the people that operate and the participants that operate in that marketplace can go concentrate on delivering market leading and differentiating solutions to their clients, not worried about the infrastructure that underpins them. And it enables them to invest in that infrastructure. I think the danger where the market doesn't own the infrastructure is that propensity potentially for there to be a race to the bottom. And people underinvest in infrastructure, and that's not good for the market.
So they might say, oh, this is great. I've got this kind of cash cow, and I'm just going to keep milking it, but I'm not going to give it nice grass to eat.
But at the end of the day, what we do is cost. It's a cost of doing business. And therefore, the relationship can become quite transactional rather than strategic, i.e., that platform can do it for 80p, that platform can do it for £1, that platform can do it for £1.20. I'll go with the guys who do it for 80p.
Yes.
And then, of course, the other two providers think, well, I better make mine 75 or 70 pence to attract business. And that's where I think that race to the bottom can occur. And that can lead to a lack of investment in infrastructure. And I think that's poor for the market as a whole. I'm sure my competitors think differently, but that just happens to be a personal belief of mine.
Let's talk about those plans now. You've got this investment. This segment of the podcast, we can talk about the future and what you're planning. Another bit of language that came out of some of the recent press statements was this transformation from being a placing platform, of course, which is in the name at the moment, to becoming a collaborative data exchange. Can you explain what's that all about?
So I think that touches on some of the points I made earlier about not just learning from financial services, but other industries. And if I think of what Spotify has done to music, what Netflix has done to film, for example, we all experience a completely different way of interacting with those capabilities. So if I go back to when I learned to drive, which is a long time ago now, back to the sort of mid-80s, if I wanted a tape to listen to certain songs in the car, I had to physically move records and songs from LPs to tape, from CD to tape. It's what I would call a data to process environment. You'd physically move the data to the process.
We've all had those long rainy afternoons making compilation tapes for our friends.
Absolutely. Yeah. And it's all done in a very physical way. You move it from A to B. Today we get into our car, we log into Spotify, and we go to the data. We say play driving playlist. And that's fulfilling exactly the same business process, if we want to call it that, which is I want to listen to these 10 songs, but it's done in a very different way, and it's done in a much more flexible way. And that, I think, is when I talk about learning from other industries, the likes of Spotify, Netflix, and so on, and what we experience day to day, not just in our professional environment, is when we move data, and I've heard a lot of that within the insurance industry, we need to get a lot of structured data. A lot of our data is unstructured, and we need to get it into structured formats. The moment you start moving it to the process, whatever that may be, PAS, placing, the Velanetics and claims process, then you invariably start changing the structure, because the structure normally adheres to the process that's calling it. And that means you end up with lots of different ways of describing the same thing. When you start bringing the process to the data, then you genuinely have a core data record, and you have a singular version of the truth, as it were, and the process is interacting against that. And so when we start talking about a digital data exchange, it's really about driving forth on some of those concepts, which is, can we bring some of those processes to the data rather than just constantly moving the data around from A to B to C on a perpetual basis?
Yeah, let's bring that back into insurance sort of terms. Could that be a broker might just put some of their order book out and make it visible to the marketplace and just let other people in the marketplace, some of the underwriters, start almost bidding on it? Is that possible within the data exchange without having to sort of hit send?
Ultimately, it might be. That's not to say, yes, we're going to do that. But there are other areas that we're looking at as to whether we can collect data, which is typically passed around the industry as an attachment to an email today, or several attachments to an email. Could we not ingest that data, store it, and allow access to that data to the people to have a look at it under the correct security, of course?
Obviously, it's the broker's placement, and so the broker can say, well, I want my A list of friends to have a look at this and quote on it first, and then I won't show it to anyone else.
Almost like the concepts of a data room that you would go through when you're buying or selling a company. You would put your documents into the data room, and you would grant people access to view those documents, the potential bidders and so on. Are there things that we can learn from that, which is perhaps where we could ingest some data, provide that type of facility where perhaps brokers could grant access to the underwriters that they're dealing with to actually view that data rather than necessarily attach it as an email all the time? Then we've got one version of the truth. And then perhaps clients, for example, could make amendments to that data. And we're not just constantly looking at, is this the right spreadsheet I've got, or is this the right PDF that I've got? So it's looking at those sorts of areas where we can start bringing that process to the data rather than necessarily bouncing the data around.
I remember when PPL was really starting to be used 4, 5, 6 years ago, I remember bumping into old broker friends and saying, what do you use it for? And they said, well, I don't really use it. I just give it to a technician to kind of backfill. I go and do my thing as usual. Whether it's via email or via still writing things down on bits of paper. And then I kind of throw that to my technician like I always have done when I've done it and say, can you just do that? And so this was a sort of thing that technicians do after the event. On the majority of times that is the case. So I presume the goal is to get that to be that environment where that broker is in that environment, using the space before the event to quote business as that preferred space. The first place they go to is into PPL to quote the business and obviously to place the business before the inception date, rather than use it and treat it as, this is just the digital record tool thing that someone else does.
Absolutely. When I first started in banking, there was a function called trade support. And the trader would literally throw the ticket over the shoulder to the lackey, someone like myself. I've seen
some of these where, you'd have the trays, you chuck them on the floor and someone sweeps them up and
then
at the end of the day,
booking them into the system. So ideally, we want to push left. My perception in coming into the industry was rather than a single life cycle. So we used to talk about the trade and the transaction in banking. And sometimes those terms were used synonymously, but if you're a bit of a data geek like I am, they're separate.
Yeah.
In that the trade has a lot richer information. Might be, for example, I'm buying an Apple corporate bond at 5.25% that pays over 20 years, and these are all the pay down dates and so on. By the time that translated to the transaction, which is what gets reported to the regulator, that was a 5 million buy of Apple. So a lot of that rich trading data was lost in some respects, but everything flowed left to right. It wasn't, we enter the trading information and stop, and then we enter the transaction information and stop. And it seems to me, if I look at insurance, to your point, the way the process works, there's the trading process, which stops, and then there's the transaction entry process, which starts and stops as a separate process. I'd like for us to push further left into that. So we push nearer to our business users, nearer to the brokers, the underwriters. We provide more value to them. And then we capture the data as early as possible using things like digital contracts, so the partnership we've undertaken with Artificial Labs, for example, the work we're doing with Microsoft, which is all about more integration or tighter integration with the products typically most people are using every day, such as Outlook and Teams and so on, and be part of that function up front. Then, of course, the data can just flow left to right through a single life cycle, which incorporates trade into transaction, not be seen as two distinct life cycles. And I think that will offer greater efficiency, that will offer deduplication of data, it will offer lower or no rekeying of data, greater accuracy. So I think there's real benefit to that as well as to us as an organization. So that's certainly the intent, is to push further left in that process.
Yeah, mentioning the Microsoft partnership. So yes, fill me in on all of that. So is it really sort of, yes, all the things that we know Microsoft for, there are lots of other things I'm sure that are more behind the scenes that we probably, us as standard users of Microsoft 365, things we all use every day, Teams meetings, etc.
Yes,
but presumably there's more to it than that.
Microsoft is a vast tech giant, and you don't need me to tell you that. I worked very closely with them when I was at LSEG, and probably spent the last 12 or 15 months of my time at LSEG working very closely around ultimately the deal that LSEG and Microsoft did. My role there was to look at how we transformed our data platform at that time. So I was aware from those conversations, and that gave me the benefit, a lot of insight into what I knew the Microsoft team were working on and insight into the Microsoft team themselves. So when I joined PPL, it felt as if there were certain parallels with what we had done at LSEG and what I felt we could hopefully make use of at PPL, as well as some of the relationships that I built up with the Microsoft team. So there's a number of things that I feel they bring to the table, some of which we managed to get into the video, not everything, but certainly that tighter integration with the likes of Office 365.
Well, let's face it, we all use it. So, yeah, I mean, 99% of everybody on the market will be using it. I don't know what else they'd be using if they weren't using it, but they might be using Google Docs or something.
Yes,
I don't know, somebody must be. But yeah, unlikely in a big corporate environment that most people are working in.
Yeah, and I think best portrayed probably by an example we got from one of our clients. So we had a lot of workshops with our clients as to help us prioritize. And we had lots of ideas as to what we wanted to do with the Microsoft team. But I wanted to get real direct client input into our first sort of fledgling steps. And one of the brokers that we spoke to turned around and said, well, today, of course, we've got the slip open in Word. We've perhaps got PPL open. We've got Outlook to draft the email. The broker then goes on to WhatsApp, and WhatsApp's the underwriter as to whether they're around.
It's just coming over now.
Yeah. Wouldn't it be great if in a Teams environment, you could cross tenancy and the broker could actually see whether the underwriter was online or not within that PPL instance, let's say, of Teams. If they are, feel a little green dot by their name, send them a quick chat. Have you got 5 minutes to talk now? Or the underwriter perhaps put, I'm available between 11 and 11:30. Go into that chat, call up a video, pull up the slip as a digital contract automatically within that video, collaborate on it, make the changes, press go and have that saved directly back in PPL. And then go into Copilot and say, Copilot, summarize that conversation into an email for me and attach the slip as a Word document and send. So that sort of shift from having 4 or 5 tools open today to just having one cohesive environment in which the broker and underwriter are operating, where PPL is an intrinsic part of that process flow. That's really what we're trying to get to with the Microsoft relationship.
No, that seems really useful. It's interesting that that's you kind of going to where they are rather than expecting them to come to you all the time.
It comes back to what I said earlier in terms of supplementing and augmenting. We're trying to take some of the burden off the brokers, the carriers, the underwriters, rather than concepts of replacing people. And I think, again, I come back to, I've heard that a lot really in terms of this is a relationship orientated industry. Fine. Have more time to grow those relationships by taking some of the administrative burden that we all suffer when we're either writing emails or having to redraft or think simple things. Some other feedback was, can Copilot just summarize the differences between versions? Absolutely, we can get to that. So that just makes the individual broker or underwriter more efficient rather than takes them out the loop. And that's where we're trying to get to.
And Copilot's Microsoft's iteration of AI.
Yes.
There's this sort of market-facing AI.
Exactly. That's the thing you'll see embedded in the Microsoft tools. And it gives us the ability to create custom copilots. So that's where we have a copilot that is over our specific data, not just over Word or over Excel, but actually over a PPL environment.
Yes, because actually you mentioned that video. In fact, I'll put a link to the video in the notes to this podcast. It's a nice video explaining about the partnership idea with Microsoft. And so, there were some things alluded to in that, having interesting queries. We call them prompts, don't they, in AI speak? Prompts of, is the line that this person's offered what they normally offer? Things that a broker would ask themselves that a really experienced broker would know straight away, that they know that if this underwriter really likes this risk in this territory, in this class, they will offer 50 million lines straight down. But if they're only offering you a 10, you know there's something wrong. And this is interesting that you would be teaching that AI to start querying some of those things, i.e. to make you a better broker.
And that's where you start getting into the custom copilot side of things. The standard copilot, we're using that now and we're demonstrating that now. So alongside the video, we built a demonstration environment, proof of concept, just to show people what you could get done in relatively short timeframes. And then we'll iterate that as we go forward, working with both brokers and carriers closely. But yes, the video alludes to a more sophisticated environment where you've got custom copilot built on our own medium and large language models sitting over the PPL data.
Presumably some of those clients have already done quite a lot of integrating with their Microsoft to their own broking system anyway, I presume.
Most of what I've seen to date is really still email attachments. Some people have gone one step further in that they're extracting information out of emails into databases. But a lot of people, the integration is still the human retyping.
So it sounds like it's a good opportunity for people specializing in broker systems to get on board with all this.
I hope so. I mean, and perhaps maybe the best compliment I've had in meetings subsequent to the release is someone turned around to me and said, it seems so obvious. Why didn't we do it before? And I think that's probably the best statement that someone can make around whether it's a good idea or not. Is the best ideas are often seen after the event as the most obvious.
Going this route rather than saying, oh, hey, broker, why don't you just API, connect directly your system into PPL and then do it that way?
And we'll still have that capability. Yeah. So PAS systems and the like will be able to and can integrate to PPL through APIs. And obviously the way in which Copilot and Microsoft to a certain extent integrates with the PPL environment will be through APIs, both to extract data out and to put data back in. That way we can maintain things like single sign-on and secure environments and so on. So APIs will be a feature going forward. But what we also wanted to do is just recognize the fact that people use the likes of Teams and Outlook and PowerPoint on a regular basis. And if a broker wanted to put a presentation together, there's no reason why they can't be looking at PPL screens or dashboards, push a button and say, put into PowerPoint, please, and have that go across either as a live link while it's in their environment or as a snapshot if they're sending it outside.
Again, it's that point of going back to what do people actually use. And of course, yes, if you just left the market to itself, it would just carry on using email until they've taken it as a breaking point, which of course they already have. And so you could just make it easier for everyone. They're already used to using email and Teams and other things. So just let them carry on using that. And then in the background, everything's going to go through PPL.
Absolutely. And if you can make those links live while that individual is within their infrastructure, if someone changes something back in PPL, for example, then your dashboard, therefore your PowerPoint presentation will change. It's things like that. I haven't got to sort of sit there scratching my head saying, oh, did that change? I better go check back in the system and it's another login. And do I need to just see whether things have changed? You've basically got a live link up to the point when you then say, right, send, and you snapshot it and send it to your client or send it to the underwriter, and it goes outside of your firewalls. But while it's in your firewall, you can have a live link to the underlying data.
Obviously, this whole seamless market from broker to transaction to accounting and settlement and claim, that's the holy grail. That's what we're all working towards. We've got some delays in Blueprint 2. Obviously, every time you open a newspaper or digital newspaper these days, there's probably a BP2 story, and there's been a lot of stories about the delay. Are you affected by this in any way?
So we're affected that we were gearing up and planning for phase 2, which was then gateway integration into Velenetic. We are and will be affected dependent on how that's seen going forward. There's already articles in the industry about whether phase 2 and gateway will be done another way by Velenetic. And obviously that's an important aspect for us to understand in terms of integration. It also comes back down to ultimately that long-term vision as to where people see the markets, and do you bring the process to the data, or do we then send it to Velenetic? I think that's a bigger architectural question for the industry to solve. But again, there, I think that would come back to certain advantages that PPL would bring to the table in terms of its ownership structure, if that were to be the case. So yes, we have to keep a watching brief on Blueprint 2 and what that is going to look like architecturally, because ultimately our role is to pass that data in some respects to Velenetics to do its job. And we're keeping a watching brief as to what that might actually mean. So we're impacted in that regard, but it doesn't stop us still looking at things in terms of the way we model data, still looking at things like MRCv3, CDR, all of those industry standards, if you like, that the industry expects us to adhere to.
And that's market from contract, the latest version,
yes.
Which was really called, I think it was somebody called it IMRC, but then they stopped calling it that. That's the
market reform contract. Market reform contract, yeah.
And CDR is the core data record.
Core data record,
yeah,
indeed.
The common standards by which sort of the rails upon which we're all running. And what about the timetable for the Microsoft strategic partnership? When do you think we're going to start seeing some of these interesting new tools?
So we have the demonstration environment now. That's something we were keen to put in place, and not just have the video with the high production values, but actually have more of a POC demonstration environment. So we have that. We're showing that to clients now, in essence, where we've got a dashboard that people can work with, tailor. We've got some co-pilot interaction with that data. So our next step is to broaden the scope of what we've done there. That's both with our broker and with our carrier community. And then we'll look to, in a very true agile way, iterate little and often releases into the marketplace. I'd expect us to, I suspect, have a GA, general available aspect to that early in 2025. I don't want to preempt that.
Because it's not far off.
That's something I've heard a lot, really, in terms of this industry, is we hear a lot of promises and little delivery. That's something my intention is to avoid. And so what we want to achieve with the Microsoft delivery is that little and often, work with our clients, have some sort of iterative release process, put things into preview mode so people are working with what's to come. And then at some point in the near future, that will turn into a production environment. But I want to make sure we're bringing value and people are feeling that they're getting value out of what we're doing, but in a very iterative way. So that'll be a genuine agile type approach that we take to that with our clients, working with them very closely and collaboratively.
Obviously, we've got a competitive environment here in London. There's a few well-known competitors. How do you feel about that ultimately? I mean, no one really likes having competition, but it's quite nice to have it to spur you on. Or do you think, on the other hand, is it a bit of a distraction?
Primarily, it's what are my clients after? So if I'm delivering capability, if I'm delivering into the marketplace against my clients' expectations, that's completely more important to me than what competitors are doing. But I recognize the fact that we have competition. I've only ever worked in a competitive environment. When I was at Bloomberg, it was Thomson Reuters. And when I was Thomson Reuters, it was Bloomberg. So it's not strange to me to have competition. I do feel, though, particularly around infrastructure, as I touched on, the market needs to avoid that potential race to the bottom. It needs to avoid having that transactional relationship with infrastructure players. I'm all for competition in that trading. Are we enabling our clients to differentiate their offering, to add their DNA to a framework type capability where they can differentiate their offering against their clients? But ultimately, I think the industry works best when it can rely on a solid, stable, invested in infrastructure, which should be world leading. And again, I refer back to the likes of CLS Bank and so on, where they attract, let's say, 67, 68% of the global foreign exchange market to London. And I think that's the opportunity for us as the London market. I think in the London Matters report, it said it's something like 43% of the marine market comes to London. How do we make that 50%, 55%, 60%? And I think that's predicated on really strong market-owned infrastructure.
Once you get that really strong, liquid, deep pool of capital and you get a better deal here and it's easier to do it here, then of course it's more likely to come here, isn't it?
And I think that supplements the expertise that's in the marketplace. It supplements the relationships that people can build. So it attracts markets, or it attracts business to the London market for all the right reasons.
Once everybody's running in this digital marketplace, when something's fully digitized and fully interconnected, would you really need platforms in the same sense? There is a platform, obviously there is digital infrastructure, but when I pick up my mobile phone, I don't have to just only phone people who've got Samsung phones. We're all using that common shared infrastructure and same data standards, European or whatever mobile phone data standards of 5G or whatever it is, and we're all talking to each other, and it doesn't matter if it's they've got an iPhone or they've got a Samsung.
I wouldn't necessarily equate standards with platforms.
It's good because I think part of my job here is to show my ignorance, and therefore you can now show me where.
I don't know about. I wouldn't go that far, Mark. But
let's say there's only so much I can understand. I know you understand a lot more about this.
Well, if I go back to my previous experiences, lots of standards, FIX in terms of trading, the FIX protocol in terms of a trading message, things like FPML, so standard financial products markup language. I think FIX is Financial Instruments Exchange. If I go back to my acronyms.
So here we've got our record, and then we've got our data council standards.
But it still doesn't do away with electronic trading platforms. If you think of the purpose of what we do, if you bring that down to basically allow two or more counterparties, probably more in the insurance industry because of broker and then underwriters and followers, to actually negotiate and execute on a transaction, that's the process and the purpose of the platform, I would say, is to facilitate that negotiation and execution. That doesn't necessarily mean a standard way of communicating with that platform in or out reduces the need for the platform.
And so that output can then go to Velenetic and they can do what they need.
And we touched back on your earlier point about integration to PaaS systems and other systems within the marketplace. Then yes, that's the standard way in which that ecosystem should intercommunicate. And again, I think it is an ecosystem rather than one proprietary environment that allows that to happen. It should be an ecosystem of capabilities which then interoperate using the standard ways of communication.
So does it therefore mean that there's almost a winner-takes-all type scenario within platforms, i.e. the more people can get to use your platform, you're the market leader, the better volume, the better utility that platform has, therefore the more people are going to use it, therefore the bigger it's going to get.
Sort of a virtuous circle.
Would it tend to a natural monopoly at some point? Would it squeeze out? Given your experience in other markets, does that happen?
I'm not sure. And monopoly is an interesting
word. No, I don't mean monopoly,
because
monopoly is mandated sort of by the king. So
well, if we got to that.
That's where probably the original definition of monopoly is that, I'm going to take control of all the tobacco because I'm the king. Whereas here, it wouldn't be that, but it might be when something gets to an absolute critical mass, you think, well, why would I go with the one that's only got 5% market share? Because how am I going to convince other people to use it?
Ultimately, I see our job is to provide a compelling capability and a compelling solution that our clients choose to use. And rather than feel that either we've been mandated or ideally, if I get a call from King Charles this afternoon, I might think differently. But that's all we can do is engage with our clients, take feedback from our clients and put as compelling a solution to the marketplace. Ultimately, I want strategic partnerships with our clients. I want them to feel that they're sat around the same side of the table as us. It's not a sort of vendor-customer transactional relationship. And that's what we're trying to provide.
Of course, when we go digital, we're by definition going completely global. I mean, everyone uses Teams in the whole planet. So how far do you think PPL could go in terms of not just being the London market, we could be just the global market?
Well, we already have non-London brokers and carriers on the system. I think when you start, as you say, communicating electronically and therefore perhaps trading electronically as well, then physical location perhaps becomes less of an issue. I still think, though, and one of the things I think Teams brings to the table is it still does enable you to have that relationship face-to-face, albeit through a virtual face-to-face, even if you're not in the same physical location. So I don't think the industry should step away from that. I tend to think that my sons have a relationship with their friends today through something like WhatsApp. I had a relationship with my friends through something called the telephone, and my mum had a relationship with her friends by having a pen friend and writing to them. So the underlying tools may have changed through which you manage that relationship, but the relationship still persists. And I think we'd still want to drive that within the London market. Again, speaking to a lot of people since coming into the marketplace, I've heard that a lot, that it's important that we have those relationships. It's important that that expertise and that specialism comes across. I think as we enhance the electronic capability, then it's just a matter of how does that spread and how can that be spread through an electronic media rather than it not being something that could happen because of physical location.
Yeah, I think you're right. I think the human side of it is that insurance is really about trust. It used to be, yes, obviously you buy a piece of paper. Now you'll buy a digital contract and it'll say, I'll pay you. But you really need to look in the whites of someone's eyes to think, well, this is a lot of money. Do I really trust them?
And perhaps this is a way for London-based individuals who wouldn't be able to go and meet easily face-to-face someone in Dubai or someone in Singapore or someone in Bermuda to then start building relationships outside of the square mile through the use of the electronic media that we're planning to put in front of them through something like Teams, and build broader relationships to go and win more business.
Remember when Twitter was getting big, people to have tweet-ups. It was people that they'd met on Twitter, and then they would actually go and meet them physically afterwards. Become my friend on Twitter. We've shared lots of interesting opinions, and they're a fascinating person. Well, I'll go and have a beer with them. So who knows? We might have become the sort of social media platform for all insurance, and then the people will still come and meet up in the Lamb in the Leadenhall Market.
Well, I never partook in a tweet up, I must admit. So
no, neither have I.
Now, come on, you sound like an expert.
I don't think, but that was a thing, but I think it's sort of not a thing anymore. I don't really know. But anyway, John, I think I've come to the end of all my questions. Do you think there's something we've missed, a burning question that we should have answered?
I don't think so. I think covered quite a lot of ground there in terms of me, PPL, our direction of travel, our ownership structure, all of which I know is important to the people that I talk to, our clients in the community. So no, I don't think there's anything that you've missed out on there, Mark.
It sounds really interesting. You've got the means, you've done this kind of thing before, you've got the relationships, and now we should be watching for these incremental execution benefits.
That's the intent, is to push those into the marketplace without, of course, I'm conscious that people might feel, oh, this Microsoft thing, that's great, not lose sight of our core processing platform. So that's critical. That's the engine room to PPL. So
it's got to work.
Exactly. It's got to work. And there's a huge obligation on us for that. I mean, that's 85% of the London market. It's 100 billion in premiums, 2.2 million transactions a year, 25,000 users. These are numbers that I carry around in my head every day, really, to make sure that we and the team are delivering at that core capability, because everything else is fine. I mean, I sometimes talk to the team about, if we were a Formula One car, we could have great aerodynamics, great suspension, no engine. We don't have a Formula One car.
It's the reliability question, isn't
it?
So
we're not losing sight of that. I just want to make sure that people are aware of that, because yes, we're doing some exciting things, really excited about what we're doing with the likes of Microsoft Artificial Labs, but we're keeping that core focus on the processing engine.
Yeah, because when you pick up the phone, you expect to have a dialing tone, don't you?
You do. And for all the talk in the marketplace, let's say, we're still 80 to 85% of what's placed in the London market goes over PPL. That's a responsibility that we have not only to our clients, but to the broader market. And that's not something that's lost on us.
John, thank you so much for your time.
My pleasure.
Well, I hope you enjoyed today's episode. If you did, don't forget to subscribe or leave a like or a review or recommendation on whatever podcast platform you used to access this programme. These really help get the word out. Before we go, just a quick reminder that advertising slots are available here and in other places in the Voice of Insurance podcasts. Podcasting is the fastest growing medium and attracts a high quality audience of key decision makers. It's also an intimate medium where you, the listener, are right in the room with me and the interview subjects. Needless to say, that means it's a great way of getting your message out directly to an audience because you know you've got their full attention. It's also very cost effective. So get in touch with Mark at thevoiceofinsurance.com to find out how you could be speaking directly to the industry. Voice of Insurance is produced by me, Mark Gagan. Music was written by Anna Gagan and produced by Carlos Gagan. Check out more podcasts and written comment pieces at www.thevoiceofinsurance.com.